Is oil the new gold? Let's find out next on the Energy News Beat Stand Up.
Michael, that's a great question. Oil could be next year's gold, says investor Peter Boockvar. I'll tell you what, that was an outstanding interview that he did on CNBC. Did not have that on my bingo card.
No.
Peter Boockvar is the CIO of One Point BFG Wealth Partners. He was interviewed on Fast Money to discuss why he's bullish on energy heading into 2026. And I quite honestly found this story really interesting as Peter goes through the key bullet points. Here it is. Peter said that now with OPEC, we've got more than 2 million barrels a day of production increases and quota increases, but the production increases have never really fully filled up with the quotas, which tells Peter that this is less available excess production to supply, and it really is only coming out of Saudi Arabia and the UAE. Peter also said that what Karen actually in the interview was weighing on energy stocks is the S&P is 2.8%, which is a historic low of investment in energy stocks. And then the last one was, I think $60 a barrel pricing is almost no geopolitical risks. And I think the market is almost away, assumes the war is over and it's actually no big deal. I've included the entire video in this post so that you can go back and take a look at it. I've also reached out to Peter to get him on the podcast because this Friday, Michael, I'm interviewing Josh Young, David Blackman, and Wasif Latif on this topic, on the oil and gas markets, and this is going to be huge. He says Aba said not having the geopolitical risk that you and I talked about last week. He also says oil demand is coming from the emerging markets like India and all of the other one. And that's why we're going to talk about some of these in the next story here coming up in just a minute.
Yeah, I'll probably take the other side of this theory in that oil is not next year's gold. I would say oil is 2 years from now gold. I think next year we're still going to be in a supply surplus. I don't think OPEC is going to continue to is going to cut production. And again, it's not what the actual supply and demand is, it's future forecasted supply and demand. So yeah, I appreciate the argument. And obviously I hold a lot of respect for both Josh Young and Peter Boockvar, even though I've never met him, but seems like an extremely intelligent guy. Again, I just come back to the fact that we're about to cover rig counts. Rig counts are up to, have jumped 5 at what most people consider a under $60 break-even point. So the question is, why is that? And if we're drilling new oil and gas wells specifically here in the United States and everybody cares about where WTI is going, unless there's some other geopolitical things that happen that are going to cause demand to suddenly spike. I mean, we're about to talk about the potential Fed cutting interest rates. That's only going, that'll help oil prices. It may not necessarily help supply. It'll help the demand side a little bit. But with the war in Ukraine right now, where that finishes up, that's only going to hurt oil prices. It's going to be very interesting to see where this thing shakes out. I mean, I do think that this thesis is correct, but the difference is you have to time your thesis correctly in the market. It's going back to a couple nights ago, one of my comfort movies to watch, I throw on the background while I'm working, is The Big Short. And there's the concept of you can be right on a trade, but you can be early. And you know what? That means you're wrong. Your thesis can be right, Mr. Day Trader. Got to take this into account. You can have the right directional thesis, but you can be too early, and then you can end up being wrong. And so the question is next year really, really the time when oil is going to pop? I say no. I say 2027.
Okay. We can agree and have fun. Let's go to the next story here. New report warns consequences of oil pipeline shutdown would cascade across the state. First, I want to give Katie a shout out here. This is from Katie Graham at the California Globe. She was just on the Energy Newsbeat podcast with me and my buddy out there, Mike Umbro out of California. This is a huge issue on the podcast. She brings up that the California's in-state production has declined by nearly 65% since 2001, while its dependency on foreign imports has nearly risen by 70%. By Katie Grimes, excuse me, I misspoke. Has California and oil and gas industry hit the point of no return? Holy smokes. I think this is it, because this article is talking about the pipeline that is about to close in a couple weeks. And this is about a study that she is working with two high-end experts there in California. And it is absolutely Professor Mishi and Richter and Sylvie lay it all out. I've got it all in this article here from the Globe, the California Globe, and she is absolutely a rock star. I've got the link so you can see the entire report from her site. This is unbelievable. That pipeline is going to be cut down. Guess what's going to happen? All Kern County oil is going to have to be put on trucks, Michael. That is a lot of trucks. Is there even enough trucks? Does this mean that the rest of the refineries in California start shutting down? The other 20% of the refining capacity is already slated to shut down next year, has been pulled in, Michael, as part of this story. This critical point is they're pulling into January to shut down. This is a crisis.
Yeah, it really is. And it all comes down to, and this is what we deal with in the valuation space. Great, you've got oil and gas subsurface. The question is, can you get it somewhere where you can make $1? And if you can, and can you get it there profitably and not have to basically say, well, it's more expensive for us to actually produce this than leaving it in the ground. And it's one of the things that California has absolutely shot itself in the foot at. So this was actually really, really great interview that you did with those folks in Constituted on your live podcast. So, I mean, it was great. I find it interesting here that all of a sudden you've got a USC and a UC Berkeley professor doing reports on California's oil and gas conundrum. I mean, UC Berkeley didn't have that on my bingo card, in the words of you.
I did not either. And in fact, I watched when I was driving between houses this past week. I kind of I even heard my jaw hit the desk as I was sitting there listening to Katie. And Katie Grimes is a rock star at the California Globe. I just want to give her a shout out. Go out there. Found out some wild information out there about California. Before the interview, I had written the next story, Michael. California's oil rush slips into the final act, may take Alaska's oil rebound down with it. We're not going to spend much time on this article, but I had put in here Newsom's net zero crusade. Is it a step too far? The backlash and the second order effects magnitude, according to Michael Tanner's great lines, is it's going to just wipe out any growth recovery for Alaska, because the pipelines are in. I mean, the Alaska used to supply a huge amount of heavy oil to California's refineries. If they don't have any more refineries, that's all going to have to get put on tankers and shipped overseas to China to refine. This is absolutely part of the Gavin Newsom horrific problem.
Yeah, it's going to continue. It's going to continue to keep getting worse, and this shadow fleet that you're talking about is going to continue. Going to continue to only be worse. Again, I come back to whatever happens with this war in Ukraine is really going to directionally show where oil prices are going. My thesis is when this gets solved, and I believe it will get solved, I think President Trump has basically gambled his entire perception of his administration on getting this war to end. I think this is only going to hurt oil prices because I think you're going to see India and China now even go more full bore into Russia, because I still think the stigma of Russian oil in the EU will be too big to hold.
You bet. Hey, this is a fantastic article, and I want to give Jack Prandelli. I'm interviewing him this Wednesday, I believe, and it's "Will the Shadow Fleet End?" Jack Prandelli, and his Substack is the Merchant News. Michael, this is one of the best Substacks that's out on the market right now, and I highly recommend looking at his. And we're talking about whether or not the first article was absolutely a home run. I did not have on my bingo card this morning while preparing for the podcast from CNBC. This one was from Jack on the Merchant News Substack, and it is pointing out they coincide together that the geopolitical risk is already priced into the low market. I think that it's already priced in there. The Russian shadow fleet vessels with known false flags also is a gigantic issue. And then Jack also goes in there and points out that the new tankers can be hit anywhere in the world. Look at this. If you're, for our podcast listeners, we're showing you the new Ukrainian unmanned vessels that are like PT boats from World War II. Look at that bad dog with the sensors on the bow to go blow up tankers. But the oil prices are so low. Michael, you and I have talked about this last week on the podcast. When a tanker got hit 4 years ago, $20 increase. Now it gets hit by one of these bad dogs.
Prices might drop. It goes back just what I said. I don't believe directionally oil prices will be higher once this war ends.
Oh, I think it will be, only from the standpoint we don't have the production. That goes back to the comments on OPEC. OPEC is maxed out. They have had their quotas increase, and they have not been providing them. So we're at a little bit of a disagreement on how we're talking about this. But let's go to the next story. Oil growth is going to come from a couple new places. Africa is embracing the new oil and gas for new development and will benefit Africans, investors, and the market. And I'm trying to interview for our third interview with NJ Anook, who is the head of the African Energy Chamber, and he has had some fantastic interviews as well. Major oil companies are ramping up CapEx in Africa. Independents are flocking back to Africa, provided by security and political stability, investor-friendly reform. Shell, Total Energies, are in charge in Nigeria, where their recent project approvals and auctioned 50 gas blocks aimed at securing $10 billion in investments over the next decade to add 400,000 barrels per day to production capacity. In Namibia, Total Energies, along with Norway's BW Energy, anticipates final investment decisions in major offshore projects by late 2026. And Norway's got more investment going into their North Sea. Michael, who's the loser in the North Sea right now?
BP.
The UK.
Well, yes, the UK, as BP and all of these companies will eventually, in my opinion, be in the United States.
Oh, absolutely. I think that, and we had that story about the other one that is actively seeking to move to the U.S. And we take a look at Exxon's chart there. Love that. And you take a look at the implications. The surge in the African drilling nations will bolster global oil and gas supplies. This goes back to our first discussion point, and that is oil demand is coming from the emerging markets. And I think as we get more and more people to use oil and gas in the emerging markets, India. As long as China and India, you've heard me say this before, as
Mhm.
long as China and India keep their demand up, so goes the rest of the world. I think they will outstrip the deindustrialization of the UK and the EU.
Yeah, and so okay, this adds on to it. Again, your theory is we're undersupplied and we need more supply as we continue to move through. I take the other side of the equation, and what's interesting is this story means something different to you as it does to me. What this means to me is there's even more supply in an already oversupplied market. Great for Africa because they need this to become energy independent and they need this to continue to increase their standard of living. I'm all for it, but this will only push down global oil prices, specifically here in the United States. Whereas you would say, and I'm putting words in your mouth, but I'm going to give it a shot. You would say, this is great. We're already undersupplied. The drop in production that we're going to see from OPEC and Russia when the Ukraine war ends is going to be made up by Africa, and this will only continue to balance supply and demand going forward. So I really think it comes down to, and this is the beauty of looking at these stories with sort of kind of your with your glasses on that have your different thesis, because it really makes you figure out, okay, where do I fall in line? So I think, again, this is great for Africa. We're definitely, as you said, seeing big oil dump into it. I love your breakdown of what each country is doing. LNG is going to become hugely critical in Africa. But the real question is, what is this going to do to global oil prices? In my opinion, this only oversupplies an already oversupplied market.
And that's where I think we still need trillions to meet normal decline curves. We have to go back to that basic point. All 80% of the world's oil today is coming out of fields that are depleting.
Yep.
And
Nope.
you well know that. So we got to go find new fields. So anyway, let's go to the last one is on the rig count, which is in your section. So let's go back to this one here. Let me change this back up over here. Let's have our commercial here for our great sponsor, Reese Energy.
Yeah, absolutely, guys. We appreciate Reese Energy Consulting supporting us, guys. Check them out, reeseenergyconsulting.com. If you are an upstream oil and gas company, you're not working with a marketing company, and I'm not talking about website marketing. I'm talking about oil and gas marketing, making sure you get top dollar for your product. You have to call the folks at Reese Energy Consulting, guys. I promise you, they're going to find dollars that you're leaving on the table. If you are a midstream company and you need help in all aspects of your business, finance, accounting, red team analysis on a new project, permitting, regulatory, environmental stuff, guys, Reese Energy Consulting is your place to go. www.reeseenergyconsulting.com. We love them and we appreciate them supporting the show. You can also, guys, check us out and go to investinoil.energynewsbeat.com if you are interested in finding out what it means to actually invest in the oil and gas business. I'm not talking about buying Exxon stock. I'm talking about putting your money as close to the wellhead as possible, guys. It's a great way as we get towards the end of the year to reduce your taxable income, especially if you are a high income W2 earner, guys. Investinoil.energynewsbeat.com. Go fill out our portfolio survey, our tax survey, to see actually what your tax liability is and how much oil and gas can save you. And depending on if you qualify, we may or may not point you in the right direction. Investinoil.energynewsbeat.com. I mean, Stu, from a pricing standpoint, we actually saw prices on Friday jump. I mean, both for natural gas and oil. Oil closed above 60 for the first time in a couple weeks, which is actually great. It was actually a 2-week high. And really that was on the back of what is believed to be the Federal Reserve cutting interest rates in this upcoming week. And there is some geopolitical uncertainty going on, not necessarily from Russia, but from the fact that we could be having a land invasion of Venezuela here within the next 2 weeks, which is just unbelievable in my opinion. But from the standpoint of pricing, that has sort of helped. It comes, the Ukraine Russia talks have continued to stall. We find it interesting. Natural gas, as you can see, guys, jumped all the way up to $5.27, really off the back of some colder than expected weather. And obviously we are in a draw season, guys. So if you are producing natural gas and you are not hedging your gas right now and updating your hedge profile, guys, please, you can go get some costless swaps at 425, lock in your summer natural gas production, and do not worry about where prices go. Get in on all your natural gas. It's pretty interesting. We also did see rig counts, as Stu mentioned, come out. We saw total rigs in the oil in the U.S. jump by 5, oil rigs up by 6, gas rigs down by 1, which is actually kind of interesting relative to what we would see. Looking at it at a per basin breakdown, the Permian had 0, Eagle Ford actually had 4, Haynesville up 1, Bakken up 1, and other basins were net 3, which most of them came from DJ, which is there in Colorado. So very interesting. We also did see the frac count spread stay even at 0, so it's still down. I was down 6 last week, up a flat week over week. The only other interesting thing I saw is Riley Permian. They have this really interesting acreage position in what's called kind of that Yeso trend, which is out there in northwest Eddy County. It's a really shallow formation. I've actually become really interested in and done a lot of work around that. They recently acquired Silverback Exploration 2, and what they've done is they've actually gone ahead and sold their midstream assets, which they're calling the Dovetail Midstream LLC, which is a wholly owned subsidiary. They went ahead and sold it to Targa Northern Delaware, or Targa, for about $111 million, which also gives them the right to earn up to $60 million in cash payments contingent on certain volume-based thresholds, which you know what that means? That means they're going to be pumping gas down that pipeline. I think this is actually a great move for Riley Permian. It allows them to continue to develop that trend while knowing they can put their gas down the pipeline. I think this is actually a really smart move. I'm a big fan of what they're doing. So great job over there. Other than that, Stu, that's really about all I saw this week. Nothing too crazy. As again, we get into Christmas, it's a little bit of all quiet on the Western Front. I expect people are doing a lot of scenario analysis, getting their stuff ready for 2025, and I expect Q1 2026 to be absolutely insane.
Oh, I do too. I think we're going to have some wild times there, and I think we're going to have a lot of fun, Michael. So
absolutely. Well, my favorite question I get to ask you every week, Stu, what are you worried about this week?
I am not worried anything, but I want to give Josh Young this is a coffee mug that this is my favorite coffee mug. I'm an old bull. Bison Insights. Go out to their Substack. They are fantastic. I'm interviewing Josh Young on Friday with David Blackman as well as Wasif Latif, and that is going to be a heck of an interview. We're talking about the global energy markets. So, Michael, buckle up.
No, absolutely, guys. It's going to be great. We appreciate everybody checking us out here on the Energy News Beat Daily Stand Up. But we're going to let you get out of here. Start your week. Appreciate you checking us out and starting your week with the Energy News Beat Stand Up. For Stuart Turley, I'm Michael Tanner. We'll see you next time.